have known me already. My name is Jim Zhang. I worked for a Royal Bank of Canada over 18 years. 12 of that 18, I worked for private banking, which are taking care of the clients. They have minimum $1 million to invest. So lately, I focused on only investment instead of private banking. I take care of your credit card or mortgage, only for investment. So for me, I have seen many families. They are doing so well financially, or they are not doing that great. I saw the best and the top 3 you have to avoid to be good. So that's my, let's say, the investment or the bank experience. Literally, since 5 years ago, how many days ago? Since 5 years ago, I left the bank, came to Middletown to have investment. We acquired investment, a hotel, then 2 hotels, 3 hotels. For that part, it's investment. However, you have to manage your business, the operation. Many stuff is unprojectable. So let's say this morning, because we are under renovation for a hotel, I went to the hotel, a staff, I think her age is 62. She watched me with tears. I said, Amy, what's going on? She said, oh, I'll have to quit because of my parent, my father is 90, so she needs my care. And my granddaughter has injured as well. I'm the only one can drive out of the family. I comforted her. I said, it's okay, take care of your family, but when you are back, when you want to come back, we have you back. Always have things you do not know. Instead of watch the financial statements of Microsoft or Apple, the company. That is the difference. I see both sides of the world purely invest from the bank perspective or investment side and the real business side. So that's the reason I think I'm very confident and I'm happy to give you the insight of the investment, because this is a very big picture of the investment. More I know you, what you want to learn from me, I can give you more accurate presentation, because 18 years or plus another 5 to deliver in 1 hour, I have a lot to talk to you. Let me know what you want to learn, okay? I will not, this one, I want to talk about this one. When I started my career as an investment banker at a branch, mutual fund or stock market fund global. So mutual fund are the biggest lately. So switch to ETF a lot. Many people talked about stock. In the real world, when people have money to pick up and only buy stocks are very difficult. Because let's say for the people in this room whose full-time is investment, watch your stock or investment only, you don't have to do anything else. There's nobody, including me. So that's the reason, for example, for last week, the stock market dropped a lot. Who noticed that? Thank you very much, that's pretty good. So, you know the reason? War started from 3 weeks ago. Why last week dropped that much?
We expect to stop on the gas.
Fear.
The war will stop.
Fear. Thank you very much. So, thank you. What's your name?
Michael.
My name is Jim.
Michael.
Okay. So, the stock market does not fear after the fact. If I know Apple this quarter will lose XYZ because of the lawsuit, that's fine. The stock market is scared of uncertainty. Right now, if the war can finish under control of President Trump, then the crude oil price could drop to $40 per barrel. Otherwise, could go up to $150. That's the major one, cause the market to go down so much, right? However, if you want to pick up the stock, drop out that stock, you cannot do that for long term to be success. And I know why. I'm going to share with you today. IRA, 401k, Roth IRA, 529. You have all?
Some.
No, it's five. I don't know what 529 is.
That's
The
education.
others, yes.
That's for the kids' education. Yeah, for the education fund. Number 2, who has automatic contribution weekly, bi-weekly, monthly to your 401k IRA?
Or my wife does. Not me, but my wife.
Can I have your wife to be here today?
She's great.
Okay. So I'm going to share a little with you today. The only way you can succeed to be successful for your investment for long term to accumulate wealth is automatic contribution. You make the system work for you. It's not the amount, it's the system. Without the system, you will fail. I saw so many families to do investment for long term, and I managed some of the families' wealth over a decade. I know from the branch level, at the beginning, people don't have that so much money to the people. I call it the top 1% of the society. They have $50 million US plus. Those families, I saw those numbers. That's the reason I'm so confident to share with you today what to do to be successful. I'm happy to share this one. Stock investment is an art, and the bond investment is a science. Because the bond, as long as you can hire 20 PhDs of mathematics, your firm can be doing well. However, stock is different, totally different. When I worked in the firm, on the same day, you could see 20 advisors recommend clients to sell Apple. Bad, sell. Another 20 advisors say, you know what, opportunity, buy Apple. Same office, 40 advisors. People read the articles, the information, the news. They get a totally different turnout. So I am a big fan of value investing. Who else in this room? Why? Charles, you are young. Why do you like value investing?
Because nobody wants to buy the bad investment.
Thank you very much. Amy?
Because value would last. Otherwise, it's just gambling.
Yeah, thank you very much. So for me, not only when I was the investment advisor, I followed that philosophy from Warren Buffett. Nowadays, when I do my real business management operation, I follow this as well, because it's so difficult for you to pick up the company or the stock, and you could gain in a very short term. The only way you can do well in this investment world, I would give you a couple of, there are many principles of the list. One I still follow today is only buy the good companies. When I say the good companies, I mean blue chips. We know blue chips, right? Let me know if you do not know what is blue chips. Okay, blue chips, we are naming the big, gigantic companies. Any company you know, let's say Nike, Apple, Microsoft, Verizon, any product you use, those companies are blue chips. However, I was walking through this value this morning. I was thinking of Orange Bank and Trust. They are very good valued company. If I recommended that company to my clients, it's dangerous for my license. The reason being, Orange Bank and Trust, they are doing very well. Their financial is good. However, their cap, the overall size of the company, I don't know, 1% of or 5% of GP Morgan. So when they change to new CEO for past 3 years, they are doing so well. Their margin, their profitability is very well. However, another CEO comes in, he does not manage the company very well. The company could go down very quickly. I mean, very volatile. That's the reason A, you only buy good companies. B, I always share this one. pay fair price for the best companies. I call it the best business, which are the stocks we buy. So I still follow the principle today. So what are the value investors focus on? So you got to read their financials. Warren Buffett is a very bored person. He stays in his office. He retired just by December 31st last year. So he read articles again, and again. However, he shared some failed investments he made through his career. And his partner, Charlie Munger, helped him to set up that 800 number. He said, every time you want to buy or sell a company, call this that 800 number first. So if you take action so quickly, so frequently, you lose money so badly. So value investing, which means you pick up the good investment companies and hold for very long term. That's the way you make money. Not because today I sell Apple, I buy a Microsoft, tomorrow I sell a JP Morgan to buy a Tesla. Not this way. If you want to learn the best stock to buy, to make a 50% return for this year, you can leave the room. I'm not that. I don't have the crystal ball to tell you that at all. So this one I always share. Warren Buffett said, if you're not willing to hold a stock for 5 years, don't even think about holding it for even 5 minutes. And he shared with us, if he buys a company, the stock market changed, the stock exchange market closed for 5 years, is fine. Other than that, you should not buy that company. Are you confident if you buy Apple, Apple will be there in 5 years? I would think so. But for some very small companies, if you go to whatever the financial tools websites today, you could Google, use Yahoo to say Yahoo Financial. For last a year, who are the best performers for the stock rate of returns? Some of the companies, they bring in over 100% a year. Those are very small companies. If you buy those companies, high likely you lose your money, potentially. So I also share for mine as well, and for the investment to my friends or on my YouTube channel or to my clients. So you have to have something, even you don't work, you still make money. I call it cash flow. You can see financial freedom. If you work for Apple, you make $300K a year, which is great, but if you don't work, you don't have money left in the bank account, you're not successful financially when we talk about investment. So cash flow is number one. Number two, whatever investment you have to believe, you have to pick up those companies' investment vehicles have long-term capital appreciation, long-term growth. Without that, not a good investment. That's my very simple philosophy. You have to use Warren Buffett. Warren says he follows 3 principles. Number 1, don't lose money. Number 2, don't lose money. Number 3, follow the first 2 principles. That is the way you should pick the longer-term investment choices. So when I was in the bank, this is what I did for the wealthy families. So usually, I checked with the Chase Bank. Without the 3 million, they do not take you on as private banking clients. So those multi-millionaires, the families, they receive this treat from the bank. I'm joking now. So if you hear Liam to tell you to say, I'm going to see my lawyer in the bank. He tells you he's very wealthy. Usually clients don't see the lawyers in the bank. When you see lawyers in the bank, which means you're very wealthy, you see their attorneys give you advice but don't charge you. Or CPAs, oh, I want to see the CPA in the bank. Oh, this is a fully loaded family. So they do tax planning. Usually those families they have multiple entities or businesses. Retirement planning, as I mentioned today, it's very simple. If you can receive the cash flow to cover your overall expenses without working, to me that's financial freedom. Retirement planning, that's how easy it is. Education. So 529, you mentioned, you got to make sure your kids have enough for their university tuition to be covered. So credit and lending. So who has a mortgage in this room, please? That's great. Nobody has a mortgage. Oh, okay. So I will share lately. To have home is important, but pay off your mortgage sooner is better than later. After that, you still need to get a credit. I do hotel investment as well. To acquire a $30 million hotel, I cannot, with my investors, use cash to buy. We have to leverage the bank. If your return is 8%, the bank lending you 20 million, the interest rate is 5%, 3% for 20 million, it's a pretty good return a year. And plus long-term capital appreciation. So good credit, it's what we want. Not, I saw some of the young professional teachers in this school, they drive very nice cars. Don't look at their financial. Their parents pay for it. Okay, so I'm serious. So if you know how to leverage for good credit, it helps you to achieve your financial goal much sooner. So insurance planning, I was licensed for insurance. A lot of wealthy families use their corporation to pay the insurance premium. They accumulate cash value in the policy without paying tax in the future to take the money out. Lots of those billionaires, top 500 companies, their CEOs, they take $1 of income. When they report tax, their tax is 0, personal income tax. They receive as much as the security or the social from the government as possible. What they do, when they have their company value, the shares increase from 10 million to $1 billion, they take a chunk of the shares as a security collateral to the bank to borrow money. You do not pay tax on the money you borrow. Those people know how to, they have a beautiful boat for $20 million. You could see that they have private jets, the best vacations in the world. They do not pay income tax. You do not pay personal income tax. Estate planning. So if you do not have the estate planning, the government takes 40%, up to 40% of your estate. You got to plan. You have to plan. Charitable giving, yeah, that's not hard to understand. Financial planning. So today, I will focus on the financial planning part for you. Not because you don't have very high education, which you do. It's about the system. Set up the system to do investment for you, you will be successful. That's the one we deliver today. So when you have an investment, can you tell me what type of investor profile or risk level you are? Are you shy to share? Or I need to call your wife? The investment level of your investment portfolio. Do you know your investment level? Risk level?
I would say balanced.
Thank you very much.
Less tolerant.
You told me last time, 6 months ago, you said you're conservative. But Charlie is different. He's high risk. He's high risk taker.
I'd say I'm balanced.
PhD. You. That is, thank you. So, I work in a bank. More money the families have. I have the families, they have over 10 million, 20 million investable assets I used to manage. More money they have, do you think, can you guess higher level they take? for risk or lower risk they take?
Low.
Because they don't need to take the risk. Still can achieve it. They don't want the stress. I was shared again, and again. They told me, Jim, I will make money through my active business. You help me to preserve my wealth. Lots of people thought, oh, wealthy people, they take high risk. Yes. When the investors, we call it net worth, it's over 30 million, they could take whatever the risk they wanted to take. 有钱就任性. Other than that, more money you have, more conservative you are. So I share, if you are very familiar, I could escape. If you are not familiar, I'm going to share. Usually conservative people, or when we talk about investment, conservative means focus on steady growth and risk control. They only have a 30% of their investable asset in stock, 70% in bond. But my recommendation today will be different. I'm going to share with you later. So balanced is 60% in stock, 40% in bond. The growth is 70% in stock, 30% in bond. Aggressive, I told my son is 23, I said, put all of your money in stock. You have lots of time to make mistakes. Your father does not. This is an example. I use exactly a balanced mutual fund from a Fidelity. Nowadays, many people said, don't buy mutual fund, buy ETF or stocks. Yes, however, if you can remember your rate of return, can you remember for past 10 years, this investment, if you have bought this investment 10 years ago, you just do monthly contribution and forget. This one can bring you 11.88% compounded return. Have you reached that return yet?
In the past 10 years,
Yeah,
compounded.
yeah.
Nah, so.
So this is very simple or even done. Yes. And then one investment firm use their slogan, bored and making good money. That's it. This is very boring. Fidelity balanced mutual fund. Jim, you said you have 20 years investment management experience. Yes, but have you reached 11.88% compounded rate of return every year and each year for past 10 years? If you haven't, you need to go back to talk to your investment advisor, not me. I'm not licensed anymore. So this one had 6 billion of investment, started from 1986, the year before Janet came to USA. Exactly 60% in stock, 40% in bond. Again, this is not my recommendation, just to showcase this, to show you in America, there are so many very good investments. If you just follow, you can do very well. But by the way, this is not my recommendation. So, yeah, this one shows the return compared to whoever. I don't want to spend too much time there. So next, I want to share with you the asset allocation. Actually, let me stop for a moment. So for this investment, it's a very diversified portfolio, by the way. 6% in stock, 40% in bond. In stock, they have high technology, banking, or consumer staples. They are very diversified. However, so major job I do for my clients, when I meet clients, usually the first 1 hour, just chat. Tell me about your family. Who makes the decision, your wife or yourself, your kids, the education they want to go to, the university they like to go to, and tell me, does your parent need your financial support or they give you financial support? And your kids, when they get married, do they need you to help them for the down payment or they're okay? As much as possible, I learn about you and your family, then I can give you very accurate recommendation. So when I give recommendation, usually to say, hey, I set up asset allocation for you. Today, Gemini, ChatGPT, they're smarter than I am. They can help you for sure, but this is just an example. For institutional, if you give me 100 million, I use the portfolio, I even can help you well. Again, this is just a showcase to show you should have the major component for large cap or small cap. This is just a sample of the portfolio allocation. So why this is so important? Let me show you this one. Warren said, if you do not hold the stock for 5 years, don't hold it for 5 minutes. Let's say before the war started, you bought Apple, Microsoft, the best companies in USA. Today, your return is negative 11 to 15%. I made in only 860K left. Why? A year, your investment could lose 52% easily. Oh, sorry, gain 52%, but lose 42% easily. If you can hold it for over 20 years, you never lose money. You could have gained as much as 17%, as low as 2%. If you invested in September 2008, because the big crash was October of 2008. That was my 3rd year as an investment advisor in the branch. And my heart was broken. The bank taught me, if this client cannot achieve the retirement goal in time, if they have a home active value of the house, they could leverage to invest. I listened. I used the strategy. A family followed my strategy. They borrowed 200K to invest. That's in September. That's how I remember so clearly, 2008. At a year, the 200K dropped 40%. They called me with tears. Sure, you should ask the strategy. I look back today, after the portfolio I helped for them, they would have compounding 8% year over year if they did not sell. If you don't hold the portfolio for 5 years, don't even buy it for 5 minutes. That's the important of the, okay, stock market, the character is volatile. That's something's guaranteed. CDs, you could make 3%. The real inflation in past 10 years, 7 years, we know it's over 3%. The reason being, in 1980s, when they calculate the inflation, the index, they used your home. If you buy a home, you pay a mortgage, they use that component as the index. Today, they only use, let's say, you bought a house and you have a mortgage of 600K, you pay $5,000 per month. They don't use it. They make assumption to say, hey, if you are renting, we only use the rent component as your cost. They don't use your mortgage payment. I know they are stupid, but they try to be foolish as to say the inflation is only 7.9% in 2022. If we use the old method of the 1980s to calculate, that was 15% of inflation, which means your purchase power is going down each year and every year. So this one, I share, as I mentioned to you, the balanced portfolio, you have a 60% in stocks and a 40% in the bond. Let me show you, for the long term, your rate of return, the difference of the stock and the bond. The bond, you don't lose money until that 2021, that big year of going down. However, if you can hold the investment for long term, stock makes sense. But can you? I'm 55. If you're 40, you are 45, you saved through your IRA for $400K, $600,000. Can you afford your portfolio go down 40% that year, you still can have sleep. If not, that one does not match your risk level. You need to reduce your risk. You don't want to go see a doctor to say, hey, doctor, I cannot have sleep. Why? Because my stock portfolio went down 40%. You cannot do that. So this one is talking about why asset allocation is so important. 1 year, the large cap or blue chip, as we mentioned, is a good, or small cap or REIT. Who knows what REIT means? REIT, which means, let's say the first one, 2010, Real Estate Investment Trust. Basically, they invest into real shopping malls, big office buildings, residentials, or hotels. Some years they are doing the best, large cap, small cap, bond. But you never know, nobody knows this year who is the winner. The best way to do, to have asset allocation for your portfolio. So this one, we talk about stock and bond. If you hold for 1 year, the stock could lose you 39% and 40%, but the bond, you still can lose 8%. But over 10 years, how about 20 years? You only can gain, but never lose money. The conclusion is, so we invest in the market, not at the time, today or next week, it's winning or gaining, or losing. That's the way, what's the word? Discipline is the way to go. So this is the way for people to invest. But when I was managing people's money, 80% of my clients, they are balanced, as we showed today. So for the balanced portfolio, the second one, for the balanced portfolio, if you could hold for a year, you can lose 40%, but some data show the 42% depends on the time they have the data. But if you could hold for 20 years, you don't lose money. So this one, just to showcase, when I work for the bank, I deal with the top families, what they do. Most of their investments are those not available to the public. They have lots of private equity. They have somebody had, I have a 4-season hotel in Miami. Can you guess in the Miami 4-season hotel how much value could it be? I give you choice of 3: $20 million, $100 million, or $200 million. Will be over $200 million for a 4-season hotel in Miami. So this one I share the power of compounding. If you can invest $20,000 already in your IRA 401k, and you can continue to contribute $900 per month. And I'm going to show you literally why I use 10%. Over 25 years, you could have the total of $1 million. But your contribution is only 200K. You invested 200K, you have $1 million. If you invest, you can hold the risk for long term, but it's very difficult. I'm going to show you later. This is my investment portfolio. I'm going to show you this one. Why do I have here? Even I am a balanced risk taker, but I still have only 10% in bond. Actually, not a bond. It's a short-term government money market. So SCHD, I'm going to show you today. Why do I use this one? Who does not know what a QQQ means? Oh, sorry. I'm going to show you later. The first one, I put 10% in iShares, 1 to 3 months treasury bond. The federal government of the USA borrows your money, but you do not lend it to them for 10 years. The maximum is 3 months. This is the safest investment you could have for your portfolio. You could hold this one for a month, 10 years. If you're scared of the stock market, where you have paychecks, put whatever percent, 10%, 20% into SJOA, you can do it. You do for past 12 months, you get a 4%. It's better than CD now. And anytime you can take it out. You put the sell order, you get the money tomorrow morning. This one. I put 10% of my portfolio. I put a 30% in Schwab US dividend equity. I think this one is better than bond. I showed you 40% of your portfolio as a balanced investor. It's a bond. I don't use a bond, I use this. This one is from Schwab, number one. Number two, they use top 100 dividend distribution companies USA. They charge a fee very, very low, 0.06%. They use the top 100 companies. As I mentioned today, Verizon or Microsoft are on the list. But they limit the percentage of those big companies, let's say Tesla, it's Nvidia. For those big, gigantic IT companies, they're volatile. They take out or they give a very small percentage for that. That's the reason this one is very stable. You could see some years, 2018, they have negative 5%. 2022, they have only negative 3%. If you look back for 10 years, they never lose you more than 5-6%. The bond, 2022, lose you 17%. I use this one. VOO. Who does not VOO in this room, please? Liam, thank you. So VOO, this is the standard. The top 500 companies, the exact number is 504 companies. Everybody's using this one as a KPI. When you give your money to your investment advisors to manage your investment, you could ask him, oh, can we compare this portfolio to SP 500? We use VOO. So the data shows 87% or 86% investment advisors, including me, when I worked in the bank, never beat this for long term. 1 year, easily. Over 10 years. So in the year of 2008, Warren Buffett has a beat, to say whoever the mutual fund manager or private equity managers, if you can beat SP 500 in 10 years, I give you $1 million. The challenge, many people say, I take the challenge. Warren Buffett gains, he gained already $1 million. Warren Buffett said, when I passed away, my family will follow the portfolio of 90% in S&P 500 and 10% is short-term bond, which is I use the SGOV. So if you can take the up and downs, I still have sleep. This is the one to go. So let's have a look. For over 10 years, you make 15%. Compounding each year, and we know 72 rules. If you can make 12% a year, every 6 years, you double your money. So that's the reason when I shared with Charles today to say, hey, who can get the best value from me today is you, if you could set up your investment system. So the QQQ, this is the QQQ. QQQ, Liam, this is from the company, sorry, the VOO is S&P 500. The QQQ is NASDAQ, top 100 companies, take out financials, no banks. So the most two ETFs, buy and sell and hold in the market, is VOO and QQQ. QQQ has more volatile, up and down, you can lose money easily, you could go up so well. I'm going to show you in the next slide to say, oh, here, we could have it. 1 year, 5 years, 2 years, whatever. 10 years, you have a 537% return in 10 years. So this one shows the blue one is the QQQ and the orange is VOO. So let's go back here. I invest 10% in SGOV, and 30% in the dividend, 30% SP 500, and 30% in QQQ, Nasdaq 100 companies. So I switched my career 5 years ago. If I didn't, with the AI developing so quickly, I believe for your job and my job as a real estate professional and an investment advisor could lose the job very easy. People be educated so well, why do I need to pay my advisor $50,000 or much higher a year? So yeah, this is the portfolio I use. So as I shared early this morning to say, I know the best value as an advisor to help the audience members, let's say, people in the room, to avoid those mistakes. Because I saw those mistakes of investors or the bank clients over 18 years. I saw it. I saw how they did well. I saw how they did not do well or they cannot do well. You do not have to make 18 years mistakes to do this. I share with you today. Number one, emotional trading. I know I have a good friend. He has a PhD. He used to work in San Francisco for a big company. I'm not going to mention the name. You may know him. He's very, very smart. He shared with me, Jim, I like Google. I like XYZ companies. But every time I click my mouse, I lose money. Because if you read the news, if you have the investment in past 1 week, it dropped 5%, what do? I'm gonna switch. You click, you lose. That's the number one mistakes people make. Warren Buffett said, buy good companies, hold for long term. It's so simple, sounds like not smart, but it's the best strategy for your investment. I shared this one already. So number two, you have no strategy. And we know if you drive a car, you need to have GPS or GPS in your mind. Otherwise, you have nowhere to go because you have no direction, you have no destination. Same thing for your investment. I want to make lots of money. How much? My goal is to make lots of money. How? Without that, don't do investment. That's the one I shared with you today at the beginning. Financial planning is so important. Oh, I heard Bitcoin. It's very good to invest. They delivered 29% in past 5 years. This year, they lose only 30% probably. Anyway, so you got to know your plan. You got to know how much you can invest and then never give up. Even if you know those are good companies or ETFs, don't easily drop your investment. Number three, ignoring compounding. So the best friend for your investment is time. I wish I listened to this level of seminar when I was young, in my 30s. I really wish so. I shared with Charles this morning. I got a good job in the bank. However, when I had 3 kids, financially we were very tight. The bank matched my 401k. If you put $100, the bank put $50. 50% to match your contribution to limit 6% of your overall pay. I told my wife, we have 3 kids, we need to buy burgers for them, we need to buy food, diapers, I want to wait. Today, look back, I should not wait. The system works for you. So, I talked about this book in my today's YouTube video, 东岳看台. So I learned a lot even as an investment advisor, as a professional. This guy did exactly the same job as I do. And he worked for JP Morgan Chase as an investment advisor for 9 years. Charles, I strongly recommend this book for you, please. So 9 years later, he made over $500,000 a year, successful. So he told his wife, I want to quit. I saw people make no needed or stupid mistakes for their wealth accumulating or investment. I want to teach people, because if I talk to people, I only could talk to 3 or 4 families a day. If I write a book, I can do more. He quit his job, he wrote the first book. Even as a professional, licensed professional, I read the book, I learned a lot still. That's what I shared in today's video I had. So I recommend this book for you. So what he mentioned in the book, the top 5 strategies I mentioned already. Number 1 is called volatility factor. So I shared, Angela, I saw my director of sales. Every time I saw her, she has a big cup of iced, I don't know, tea, whatever, and it's from a Starbucks. It's a $7 or 8 plus tax. Every time I saw her, nothing wrong. However, times 30 days is $240. If you invest this money monthly for 10, 15, 20 years, don't tell me she cannot save that much money. Sounds like very, very, very funny. That's the way for the general public. It's the only way you can accumulate your capital. It's not go to the bank to say, hey, I'll borrow money to invest at the beginning. The bank said, no. Where is your collateral? Number 2, pay yourself first. So traditionally, people use this is how much money I make. This is my total cost I pay. For the rest, I will invest. This is wrong. Should be, this is how much money I make. This is how much I want to save. Pay yourself first. Let's say 10%, 20%. Automatic deduct. If you have a bank with a Chase Bank, or you use Schwab or Fidelity, or what's there are so many brokers. You just set up, as I shared with you, you don't have to use my portfolio. Set it up every month, or you get a paycheck. $50, $100 investment, just do it. Close your eyes, just do. Don't look back. Over 5 years, you will thank me so bad. And then number 3, make it automatic. Before you saw your money, the money goes to your savings. Before you see it, we'll see it. Trust me, you spend it. So he shared a story in his interview to say, in America, homeowners versus the renters. Homeowners had 40%, not 4%, more net worth than renters. The renters, I bought my home when I was young. I have to pay the rent. Sorry, pay the mortgage. If I don't, the bank kicks me out. I have nowhere to sleep. Rental is different. You pay less. Supposedly you could invest. People never did. They could have done so in 6 months, but not for 10 years, not for 20 years. So average American, the biggest investment accumulating vehicle is their home. You bought your home, pay it off as soon as possible, over 10, 15 years, you see the appreciation. This one, for many Asian families, they automatically know how to save. You even should save XYZ dollars for your emergency funding. In financial world, this means if you don't work, this one can pay you overall cost for 3 to 6 months. I know many Asian families, they automatically know this. So this one, I share my hotel investment just because, as I said, the principle, I have the cash flow, I have the long-term capital appreciation. I'm not selling anything for today, just to say, for my world, I have the bank experience and the real business experience to share with you why the principles I shared is important. I missed this book I shared. Yeah, this book is so good for you to have. before I finish this presentation, I use Chinese. The most important part to make wealth is called 税后收入。你睡了觉之后还有收入，这才是 the way to go。睡觉的时候还有收入。So that's from very. So even Warren Buffett said, if you do not making money when you are sleeping, you work until. Thank you very much. So, any questions? Yeah. 最后收入。Yeah. Yes.
I've been studying the
Yes.
I was wondering if you share about my economics and your politics.
That part is expertise from the politics. Economics, I don't believe in economics because 80% of whatever they say is wrong. I only look into the company. Investment world, we have two styles. It's called top down or bottom up. I only trust bottom up. Study this company. For example, in US, hotel business is very bad nowadays compared to a couple of years ago. Even today, there are some companies that are doing very well, and many companies are doing bad. You need to pick up the good companies. That's me. The economics is 60%, whatever they say is wrong.
As I understand it, based on, I think the financial book I read recently, hedge fund managers were quite popular starting 20 years ago because they advertised themselves as being so smart and being able to beat the market, right? Beat the S&P, beat whatever, and actually universities and big holdings actually put money into the hedge fund managers, but now in the last several years they've been pulling back from hedge funds and doing instead into these diversified funds, the S&P, because not even the hedge fund managers, the geniuses, can beat that 10, 11, 12%.
That's very good one. So in the main street or Wall Street, we talk about this. Let's say for the private equity fund managers. For example, we learned already for 10 years challenge, nobody can beat Warren Buffett. The good ones did not participate in the game. For example, I'll give you two stories. Who knows Weight Watchers?
Weight Watchers?
Why do you know that? How do you know that?
The what? Sorry?
Look how
Weight.
skinny I am.
Weight Watchers, that's the reason? Are you the business owner of that?
That's good advertising. Weight Watchers, I don't know.
Yeah, so Weight Watchers, if you could solve those signs when you go to different malls. So I forgot the name. He's a private equity hedge fund manager. He's a good friend of my friend. We have a mutual friend. I do not know him in person. So 1 year, they identified this company. They sell ethical, very good neutral foods. He bought the company to say, you keep the food side on one of the club. So the club, they bought, I forgot, let's say $2 billion, $3 billion, whatever. So they grow the business and sell the business for 10 times return in 10 years. What did they do? They just to have Weight Watchers. If you can lose weight, if you do not take a beer or steak today, you get points. Every week, every month, people gathering to see, hey Charlie, what you did? Oh, I just avoided the beer last night. So then you get a winning or reward. For that business they sell because they collect a monthly fee, member fee for $20, $30 per person. They sold the business, they made a fortune. The guy bought a $40 billion resort in Caribbean. So you have to know, this is an example. Another one, Bill Beckman. Who knows Bill Beckman? He's a very good hedge fund manager. I follow him closely. So which company he bought? Chipotle. Who is Chipotle? You.
Not anymore.
Chipotle.
Say that again?
Chipotle.
Thank you very much, my English teacher. Chipotle.
Chipotle.
So he buy shares of the company, which is over 5%. He sat in the board. He keep buying, and literally the strategy he fired the CEO. He got a new CEO, not himself. The company or they invested 20 million, turned into 16, 20 billion. The strategy is they find a company, as same as you buy a home, you fix up. They find a company, they know they have a very good potential, they invest more enough into the board, fire the CEO, change to the new leader. The leader can do well, they harvest. This is a typical private equity hedge fund. What do? They are very good ones. Very, very good ones. They probably want to get your money to invest starting from 10 million. The good ones. Yeah. So to your question, so some of them are bad, some of them are extremely good. Another one is hotel. I think it's BlackRock. They bought Hilton entirely, or majority. They want to turn it into a good return.
This is who?
BlackRock.
BlackRock.
They have, I can't remember, they manage
Yeah.
top one money manager in the world. How many trillions, I forgot. So they did that. They wanted to sell. Then 2008 came. They cannot sell. They had to hold for another 10 years. They made it, I can't remember, 10, 15 times after that. Because they have a deep enough pocket, they can hold on to it. Yeah. So there are very, very good ones in the market. Warren Buffett, it's not a, Buffett, that is a private company. When he buys some of those Omaha, the furniture store, or different companies, right? He put 9 billion overall in 1980s to Coca-Cola. Today, he receives cash return each year after 70% from his original investment. Dumb, Coca-Cola, there's nothing funny. Coca-Cola just 70% of his original investment a year.
Through dividends as well.
Yes. What? It works. It worked for him. Coca-Cola, there's no fun, no interesting stories. Be making good money. And any? Yes.
During some like downturn right now, do you think it's a good idea to have some hedging strategy, like you buying some gold or the oil, USO?
You mean,
hedge the.
I wanted to
downturn of
answer your
the
question. So let's say in the
portfolio?
downturn, how do you hedge or to reduce your portfolio risk?
Yeah.
That's a very good one. So if you invest into gold 2 years ago, your return is 120%. More than 120%. So usually, my strategy for many people is to buy those dividend issued ETF. Let's say majority of S&P 500 year to date is a negative 7% this year. The SCHD I showed you today, they went up only 15% year to date. So again, my strategy is use a dividend issued company or companies to hedge the risk. I use that instead of a bond. Yeah. Gold, sure, you could buy gold. The reason gold making money, not because gold making money, because US dollar, they are printing too much US dollar. The purchase power is going down again. That's preserved value. When you see gold goes up, which means our US dollar inflation is very, very, very high. Yeah.
Angie, what's your YouTube channel you mentioned?
Oh, I'm sorry, I need to work on English channel very quickly. It's got a no media content, it's Chinese only.
Is it Chinese YouTube and the
Sorry?
Is it the Chinese?
Yeah, it's Chinese. It's called 东方的东岳泰山，东岳看台。That's my